Hi, everyone. Basil Chapman sitting in for the one and only Tom O'Brien. My pleasure to be. Usually I am on 11 o'clock till noon Eastern Time, Monday through Friday on market days. The Tiger Technicians Hour is the name of the program. And it's the same number, 877-927-6648. And the second part of it is that I have a service called The Opening Call. That's a daily newsletter in which I send out, starting from, 6:30, 7 o'clock in the morning. I start sending charts out. What you do is you go to the front page of TFNN, you sign in with your password, and then you just start seeing the charts come in. Usually the chart that starts it off, in fact, I've already started it for tomorrow. I'll make the changes necessary when the Dow closes, but I've already started writing it up for tomorrow, and then I add to that, and then I add other charts. This is the daily Dow. I do a study based on the Chapman Wave methodology. What is that? That is a technique that I developed over the many decades, and it's available at TFNN. It's called Introducing the Chapman Wave Methodology by Basil Chapman, Chart Analysis in the Stock Market, and it's a CD book. It gives you some exercises, it gives you chapters on all the different chart formations that we're looking at. You know, to make it real simple, let me just go to number 23, slide 23 out of 76 slides. You see, you can look at a blank chart, and there's nothing there, just the bar. What I developed was a technique of just using the labeling of uppercase letters for moving up and lowercase for down, alphabet going from A to G. And looks like this. The next thing, I could have used numbers, but at the time that I was developing this, there was a person called Robert Prechter who was discussing intently throughout the different networks the Elliott wave, and I studied the Elliott wave, and I found that just in my particular way that I looked at charts, it was far too confusing. This is a very simple way of looking at the most identifiable low bar and then merely counting each successively higher peak, and each peak should have gone to at least peak D. That's the fourth highest peak, and then you could restart. You could go to 6 waves up. You can even go to 7 waves up. And in this particular chart, this is what it looks like with the letters. And this is the SOX wave from 2005, I think it is, 1999 to 2000. And then with the arrows. So we'll use that, and I'll show you some of the techniques as we move along. Let me go through the numbers, because that's the most important thing. Right now, the Dow, in my work, we went from a sell signal to a sell mode very quickly 2 weeks ago at the end of the week. And what we're looking at, and we've been, in my opening call, this is very unusual for me. We've been mostly short for a couple of weeks now, and adding to positions and taking profits and getting back in. And so at this particular point, this particular candle here, look, on the way up, when you went from 16,333 on the 7th of August, look at those beautiful candles right there with the white background. In this case, I've used the white candles. On the way down, I'm using black candles. So on the upward way, the up days had lovely white candles, and they're nicely spaced, and it went very nicely to that peak D. Remember, we're supposed to go to a peak D. That's at 17,161 on the 4th of September. Pulls back on the 12th of September, goes to 16,937, and then has a sudden spiral to the upside. I call that in my CD, it's called a right arm extension. I was going to go there, but I won't take up time. A right arm extension, meaning that not both of the MACD and the stochastic, my two major indicators, would be aligning, and at some point there'd be a very quick failure, and that's exactly what happened. The stochastic went just over 80% for a day, and then plop, came down. And that was at a peak E. That's the 5th highest peak. And that's what I call Chapman Wave right arm extension. And then what I expected was that we'd see a series of lower lows and lower highs. On the way up, it was higher highs and higher lows. On the way down, you should see that when you go from a sell signal to a sell mode. So making that a very simple testimony to this particular technique, we have gone down to the 16,674 level, had 2 days of rallying, went to 17,099. We went back into the short position after taking profits. I think it was on this bar right here. And we're back to the short side. And look, ugly candle. And we're at the low of the day at 16,781, down 210 in the Dow. Now let's just go through these things one at a time. We have, this is the market. I'm not used to this being here in the afternoon where the market is still working its magic. Just had Dave White just did program before me. Great program. Thank you, Dave. Talking about GoPro. Look at this. Using the same technique, GPRO. What did it do? It went to that requisite leg D right there today at 98.47. The 120-minute chart has gone A, B. Now, that could be a C, but in fact, what it is a continuation of that peak E, and I'm calling this, at least for now, an F/C, and I would not be surprised if tomorrow we see the first really sharp pullback, and that continues for GoPro, at least to test and break under the 79.13 low that was made recently. That's the way I'm looking at it right now, on one condition. On one condition is that tomorrow it has to take out 90 on the downside. If it doesn't do that, we could stall here a little bit longer. So if it takes out 90, everything's set in place to come down. And that's using this basic technique that I was talking about. Now, let's do something else. The S&P, SPX.X. This is the S&P 500 cash index, trading down 22 at 1942. Now, this is very interesting because let me just double check. I don't want to speak out of turn. We went short on the 22nd via the 300% long position of the SPXS. That's the daily direction shares S&P 500 bear 3 times. So the low was 23.07. We were 50 cents off the low, which is an all-time low. And you have no idea whether or not you will make. There's no guarantee that you're going to make a D. But look at this. This is leg C. If perchance in the next 2 days or so, the SPXS goes above 26.46, that'll make leg D in the daily chart. And at that point, you're going to say, okay, now you've got to get ready for a counter trend rally. But the irony is that the weekly chart has still only got a leg A. And there's a good chance if we have turned the corner in the weekly charts, if the tide has turned from going to up to high tide, now coming down to low tide, we should make more than a leg A and a B to the upside. We should probably challenge that candle right there of 27.92 that was made the week of the 8th of August. So let's go back to the SPX, because this is what most of you would probably look at if you're looking at the different indices. Most importantly, there's a yellow circle right there. So I'm going to get rid of this circle here because it's now, I don't need it anymore. And I'm talking about this circle here, which was the goal. When I was asked a couple of weeks ago, where would the goal be to the downside if I really had a peak D in the S&P weekly chart, I circled that, and we're now into that area. And what are we doing? There's a real simple way of using technical tools in my methodology. You identify highs or lows, and if you can get parallel lines that coincide with the wicks, the outer wicks, most of the outer wicks on the upside or the downside, and then draw a parallel line with that, that creates a channel. I developed another technique, and that technique says that within a channel, you could have what I call the inside track. Look how many times the S&P was repelled when it went into this little quarter-inch track over there. Did it just recently, hit that line, plop, pulls back. Now it is holding the support line. This is what I call, this is the sell or repellent zone. This is the buy or propellant zone. If, in fact, this S&P closes the week, it's a weekly chart, we should only be looking at it on a Friday. So this is intra-week, not even 2 days into the beginning of the week. So I'm going to have to say if this and if that. I'm going to say if, in fact, the low of 1926.03 is taken out on a closing basis this coming Friday, or any Friday, but especially if it's this Friday, that would suggest that this final dashed uptrend line, where it coincides with a sub-channel to the downside and a strong up channel, and that coincides right there, 1922, that would be the next target to the downside. How quickly? Doesn't really say. I'll be right back. Basil Chapman, this is the Tom O'Brien Show. My pleasure to be here, and I'll be right back. I'd love to take calls, 877-927-6648, and we'll continue with these charts. We'll look at the Qs and the New York Stock Exchange and the VIX Index and bonds and the dollar and gold. I'll be back.